In fact, we have Siddharth Purohit. He's the senior equity research analyst at Angel Broking. He's waiting by to tell us all about what his expectation from banks are. And Siddharth, if you've been privy to our conversation with Dipen Sheth, banking clearly seems to be the hottest sector right now. Tell us, since the big boy is reporting its numbers today, what do we expect from SBI?
See, if you look at particularly this quarter, then actually not materially things are going to change as far as the results are concerned, but the outlook for the sector has certainly changed a lot. Partly the reason being that there will be excess liquidity in the system. Banks which had been struggling a lot for deposit growth so far will have enough deposits at their disposal to deploy in the advances. But the key question is here that the industry-wise loan growth, it has not picked up. It has only the growth is being seen only in the selective banks, and that too in private. Now SBI, as far as is concerned, has been quite stable as far as your both quality of asset is concerned or earnings is concerned. If you look at their total stress book, it was quite manageable, even at par with or maybe less than even the large private sector banks. So what we are expecting is that in terms of absolute slippages, maybe it will remain very high, maybe close to 10,000 crores for this quarter also. But gradually the cleaning up process is really gaining momentum, and possibly in next quarters, 2 quarters, a large part of the cleaning up will be done. So while it is very unfair to look at just this quarter and take a call, but I think that this quarter numbers may not be very encouraging, but the outlook has changed, and what we believe is that even loan growth should pick up selectively, and SBI could gain out of this. Now coming back to this quarter particular result, we believe that more or less the management will be able to maintain their credit cost guidance and loan growth guidance. Possibly they can increase the loan growth guidance by 2-3% higher. So maybe from earlier stand up 10-11%, maybe 13-14% growth for the entire year is possible. Now we have seen that bond yields has been softening of late, so maybe trading gains will be very high, and part of that can be again utilized for incrementally providing for. So structurally things are changing for entire banking space, and more so for SBI also. So in absolute term, we believe that maybe the numbers will not be very encouraging, but the trend has certainly changed for banks and SBI in particular.
At 280 rupees, do you think SBI is pricing in a lot of good news?
See, actually, if you see the last couple of months development, in fact, if you remember last quarter when they gave a post Q4, in fact, when they gave a very positive outlook, and they came out with the watch list of a little above 30,000 crore, which was very much, lower than what the market was estimating. So we saw a lot of expectation being built up, and even last quarter also they were pretty confident about their asset quality, the loan book. So now what is changing is that no doubt we are saying that a lot of things has been priced in, but a lot of other developments are happening. If you see, some of the large corporates have came forward for resolution of their asset, and certainly SBI being a large bank in the system will benefit from the resolution of all the troubled asset. So while there has been a bit of rally in the recent months, so but structurally since things are changing, so I will say that large part of things has been priced in for the near term. But if you talk me ask me for 2 years point of view, then a lot of assets can get upgraded, the NPS can get upgraded and recovered. So if you look at it from 2 years perspective, I think there is a lot of steam left in SBI. I don't hold the same view for all the PSU banks, because there has been a lot of PSU banks which are lagging in terms of both business growth as well as cleaning up process. So SBI clearly gains. So I believe that even if there has been a rally, we feel that there is more space for upside in the large PSU banks, including SBI.
Okay, Siddharth, good chatting with you. Thank you much for taking the time out and telling us what to expect from SBI. 83.93 on the index. It's a good slice of 1.5%. While SBI continues to hold good, I can't say the same about the rest of the market. It's a bad breath, 2.25% lower. Real estate is getting hard hit. M&M Finance, Page Industries, JP Associates, Diwan Housing, Indiabulls Real Estate, they're all as well cracking. On the flip side, Union Bank, Allahabad Bank, Just Dial, Sun Pharma, these are names which continue to hold out just very, very smartly. CK, what do you do with